Many business owners do their own taxes. The type of business can be a sole proprietorship, limited liability company, or S-Corporation. Preparing your own taxes can be a significant cost savings compared to paying a certified public accountant. To keep up to date, research online resources such as the Internal Revenue Service website and tax preparation software. Attend webinars or workshops on tax laws. Consult with a certified public accountant for guidance on specific situations. Using accounting software like Quickbooks can simplify tax preparation. Ultimately, the decision of whether or not to pay a certified public accountant is a personal one. For businesses with revenue of $1,000 to $2,000 per month, it may be possible to prepare taxes using free or low-cost software and online resources. However, it's important to consider the following. Firstly, the complexity of taxes. Even simple businesses can have complex tax situations that require professional guidance. Secondly, accuracy and compliance. Preparing taxes incorrectly can lead to penalties and interest. A certified public accountant can ensure accuracy and compliance with tax laws. Thirdly, time savings. Preparing taxes independently can be time-consuming. A certified public accountant can save you time and allow you to focus on your business. Here are some additional tips. Firstly, keep accurate and organized records throughout the year. Secondly, use a tax organizer or checklist to ensure you have all the necessary information. Thirdly, file your taxes on time to avoid penalties. Understanding tax obligations is crucial for business owners, regardless of size or structure. Several key aspects determine the best approach to tax preparation, including business structure, revenue, and comfort level with tax laws. Firstly, consider the different business structures. A sole proprietorship is the simplest form, where the business is owned and run by one person, and the business and owner are not separate legal entities. Profits are taxed as personal income. A limited liability company offers liability protection for the owner's personal assets. It can be taxed as a sole proprietorship, partnership, or corporation. An S-corporation is a corporation that passes its income, losses, deductions, and credits through to its shareholders, avoiding corporate income tax. Secondly, assess the revenue. Businesses with low monthly revenue, such as $1,000 to $2,000, often seek cost-effective tax preparation methods. Free or low-cost tax software may seem appealing, but it's essential to weigh the benefits against potential risks. Thirdly, keeping up to date on tax laws is essential. Tax laws are constantly changing, so staying informed is crucial. The Internal Revenue Service website is a valuable resource offering publications, forums, and guidance. Tax preparation software often includes updates and explanations of new laws. Webinars and workshops conducted by tax professionals can provide in-depth knowledge. When evaluating whether to hire a certified public accountant, several factors come into play. Firstly, the complexity of taxes. Even seemingly simple businesses can face complex tax situations. Deducting business expenses, understanding depreciation, and navigating self-employment taxes can be challenging. A certified public accountant can provide expertise and ensure compliance. Secondly, accuracy and compliance are paramount. Incorrect tax preparation can lead to penalties, interest, and even audits. A certified public accountant can minimize these risks by ensuring accuracy and adherence to tax laws. Thirdly, consider the time savings. Tax preparation can be time-consuming, especially for business owners who are already juggling multiple responsibilities. A certified public accountant can free up valuable time, allowing owners to focus on their core business activities. Accounting software like Quickbooks can streamline tax preparation. It automates tasks such as tracking income and expenses, generating reports, and preparing tax forms. While Quickbooks can simplify the process, it's not a substitute for professional tax advice. The decision to hire a certified public accountant is highly personal. Consider your comfort level with tax laws, the complexity of your business, and the value you place on accuracy and time savings. For businesses with simple tax situations and a willingness to learn, preparing taxes independently may be feasible. However, for businesses with complex taxes or a desire for peace of mind, hiring a certified public accountant is a worthwhile investment. To effectively manage taxes independently, follow these tips. Firstly, maintain accurate and organized records. Keep detailed records of all income and expenses, including receipts, invoices, and bank statements. Secondly, use a tax organizer or checklist. These tools can help you gather the necessary information and ensure you don't miss any deductions. Thirdly, file your taxes on time. Avoid penalties by filing your taxes by the deadline. Whether you choose to prepare your taxes independently or hire a certified public accountant, understanding tax obligations is crucial for business success. By considering your business structure, revenue, and comfort level with tax laws, you can make an informed decision that benefits your business. Several options exist for small business owners when it comes to handling their taxes. Firstly, they can prepare their own taxes using tax software or online resources. Secondly, they can hire a certified public accountant to handle all aspects of tax preparation and filing. Thirdly, they can use a combination of both, using software for basic bookkeeping and consulting with a certified public accountant for complex issues. Preparing taxes independently can be cost-effective, especially for businesses with simple tax situations. Tax software is relatively inexpensive and user-friendly, guiding users through the process and providing helpful tips. However, it requires time and effort to learn the software and understand tax laws. Hiring a certified public accountant offers several advantages, including expertise, accuracy, and time savings. Certified public accountants have extensive knowledge of tax laws and can ensure that your taxes are prepared correctly. They can also identify potential deductions and credits that you may not be aware of. However, hiring a certified public accountant can be expensive, especially for small businesses. The best approach depends on your individual circumstances and preferences. If you're comfortable with tax laws and have the time to dedicate to tax preparation, doing it yourself may be a viable option. However, if you're unsure about tax laws or prefer to focus on running your business, hiring a certified public accountant is a wise investment. Regardless of which approach you choose, it's essential to keep accurate records and stay organized throughout the year. This will make tax preparation much easier and less stressful. Consider consulting with a tax professional to determine the best strategy for your business. This consultation can provide clarity on your tax obligations and help you make informed decisions. Explore resources offered by the Small Business Administration, which often include guidance on tax-related matters. Tax planning is an ongoing process. Regularly review your tax situation with a professional or update your knowledge to optimize your tax strategy. Small business owners can also benefit from understanding estimated taxes. Estimated taxes are payments made to the Internal Revenue Service throughout the year to cover income tax, self-employment tax, and other taxes. They are typically required for self-employed individuals, partners, and S-Corp shareholders who expect to owe at least $1,000 in taxes. The frequency and method of paying estimated taxes vary depending on the individual's income and filing status. It's crucial to accurately estimate your tax liability to avoid penalties. Utilize Internal Revenue Service resources and tax preparation software to calculate estimated taxes effectively. Consider consulting a tax professional for personalized guidance on estimated tax obligations. Understanding the differences between tax deductions and tax credits is essential for maximizing tax savings. Tax deductions reduce your taxable income, while tax credits directly reduce your tax liability. Common tax deductions for small business owners include business expenses, home office deductions, and contributions to retirement accounts. Tax credits, such as the Research and Development Tax Credit and the Work Opportunity Tax Credit, can significantly lower your tax bill. Carefully review eligibility requirements and documentation requirements for both deductions and credits. Explore strategies for maximizing tax deductions and credits to minimize your overall tax burden. Small business owners should also be aware of common tax mistakes to avoid penalties and interest. Failing to keep accurate records, misclassifying employees as independent contractors, and not reporting all income are common errors. Claiming ineligible deductions such as personal expenses and not filing taxes on time can also lead to problems. Implement internal controls and review tax filings carefully to prevent errors. Seek professional advice if you're unsure about any aspect of tax compliance. Effective tax management is crucial for the financial health of a small business. By understanding your tax obligations, utilizing available resources, and seeking professional guidance when needed, you can minimize your tax burden and maximize your profitability. Stay informed about changes in tax laws and regulations to ensure ongoing compliance. Regularly review your tax strategy to identify opportunities for improvement. Maintain open communication with your tax advisor to address any questions or concerns. Tax planning is an integral part of running a successful small business. Taking a proactive approach to tax management can help you achieve your financial goals and secure your long-term sustainability. Small business owners should explore various tax planning strategies to optimize their tax positions. Deferring income, accelerating deductions, and choosing the right business entity are common strategies. Investing in tax-advantaged retirement plans, such as solo 401 plans or simplified employee pension plans, can provide significant tax savings. Structuring transactions to minimize taxes and maximizing deductions for business expenses can also reduce your tax liability. Tailor your tax planning strategies to your specific circumstances and financial goals. Work closely with a tax advisor to develop a comprehensive tax plan that aligns with your business objectives. Stay informed about changes in tax laws and regulations that may affect your tax planning strategies. Regularly review and update your tax plan to ensure it remains effective and relevant. Tax planning is a continuous process that requires ongoing attention and adjustments. Taking a proactive and strategic approach to tax planning can help you minimize your tax burden and maximize your financial success. Small business owners can also benefit from understanding the implications of state and local taxes. In addition to federal taxes, businesses may be subject to state income tax, sales tax, property tax, and other local taxes. State and local tax laws vary widely, so it's essential to understand the specific requirements in your jurisdiction. Comply with all applicable state and local tax regulations to avoid penalties and interest. Consider consulting with a tax advisor who specializes in state and local taxes. Stay informed about changes in state and local tax laws that may affect your business. Integrate state and local tax considerations into your overall tax planning strategy. Proper management of state and local taxes is crucial for maintaining compliance and minimizing your tax burden. Taking a proactive approach to state and local tax planning can help you optimize your tax position and achieve your financial goals.